Okay, let me see if I can get this view as well. So anyways, we were talking about the strong run, very strong run, weak run. That's what we covered. And I asked if you guys can do the optional, anyone did the optional exercises, that'd be great if you can show your screen. Anyone did any? No. Or not? Okay, so let me do an example here. So for example, in this one, first one right here, I'll show an example of a strong run. Example of a strong run would be this one. Let me see if I can get this up here. Scroll. Oh, really not. I see this right here. Here's a strong run right there. That can be a retrace because right now I'm trying, this is basically almost like a range. Let me see here. Let me get my other chart here. That's the naked chart. I'd rather see this. Yeah, this is better, 610, okay. So with this one, as you can see here, if I'm gonna see a strong run, the market has been really good. So it's really, you can see this, you see how this moves down here? This is like a grinding market. That's really, it just kept on going up and down, but it had a direction to the downside. It just took its time to go down. Same thing with this. It was just grinding. That's not a strong run. You want to have strong runs and you just have to wait. It's almost like waiting. It takes its time to get to the target. And those are the tough markets to trade if you are impatient. So I'm looking for a strong run. Like I said, this whole week has been, or last week was really weird. So here. This is a regular run. Oh, can't really find a release. Okay, so this is like a regular run, even though this strong. We'll take this as strong because I would say because you still have you still have some retracements there, but in terms of a run, again, that's a regular run. It's not really strong. Strong run involves a lot less pullbacks or retracements. This is the overnight hours. So I would say this is a strong run right here, because you don't hardly see any, retracements. It's basically, you see this erratic movement going down, it's not a strong volume bars, it's long. And here's just your retracement right there. But on that, it just continued going end to end. So this right here would be a strong run. Okay. In terms of a weak run, it says here our next assignment was basically that's just a strong run. A very strong run would be where again, it's hard to find it now because the market has not been cooperating. It's really slow, but it has direction. Let's see right here. This just right here is a strong run right here. Very strong run. You see the bars, they're end to end, right? They're end to end. And there's really no retracement there. It's just basically, that's just right there is a strong run. These are weak runs. You see how the dots are close together? That's what closing prices, that's very weak, even though it's direction. Here's another strong run right here, right there. You see the difference with the strong run? There's no retracement. It's just going from end to end, right? So that's a very strong run. Now, what I consider a strong run would be something like right here would be a strong run. This is a very strong run, but this whole run right here, if I see right there, because this whole thing right here is a run. Starting from here, you have a run. Let me see here. Let's say this one right here. So if I was going to draw an arrow, it'd be right here, run, right? And then you have another line. What's there on Control F2? Okay. You have a retrace, right? And then you have a run again, small retrace here. Right there, just a really small one, weak retrace, right? Yeah, weak retrace there, right? And then you have a weak run until it strengthens here. It continued going up, really small retraces, right? So it basically went up, that continued going up because these are small retraces here. In fact, there's a consolidation there. These are small, weak retraces. There's a strong run. Here's a very strong run. So this whole thing was basically, this whole thing is a run right there. And then you have a retrace if you're looking at the macro. What I just did over here was more of a micro look. So if I'm looking for a macro look, it would be like this. If I started down here, this would be the macro look. It'd be run, right? And then you have a retrace. And then you continued run. This is more of a consolidation. This one right here. Let me get this out of here. Consolidation would be right here with part of a retrace, right? And then you would have your continued run. That's on our macro, meaning zoomed out look. Continue going up. And then you have your retrace here again. So that would be the macro. The micro would be taking the small ones like this: run, retrace, run, retrace, run, consolidation, retrace, run, retrace. That's what we call the micro look. The one I just did now is more of the macro look, more zoomed out look. Okay, so now when we're talking about between a strong run, I would consider this a strong run, vertical, when we covered that before. Hey, Kale, did you do any homework?
Yes, coach.
Was that?
Yes, I did.
You did? Oh, you want to share your screen? I want to see. Here, let me see here.
Okay.
Hold on. Let me share the screen with you, okay? Let me get the participants, okay. So Kale, let me see here. You're the co-host now. Share your screen. I want to see.
I tried.
I was just talking to you, did the pretty good one. Oh, good. You have the grinding there and the erratic.
Yeah,
Good.
yeah, this is an example of erratic and grinding.
Okay. Yeah, that's grindy behavior. That's good. You want to show? Yeah. And there's your erratic behavior, the long bars compared to these small ones here. What happened there is this long bar right there. That's good. That's an erratic bar.
Yes.
Good.
There's more.
Yeah.
There's one more erratic, grinding.
Right. These are erratic behavior there. And that's what also, you see this right here when we're talking about right there, when we're talking about this more of a strong run right here as well. That's a very strong run because you see how the The bars are connected end to end. That's a very strong run right there, right? And then you have a weak retrace, right? The red, and then
Yes.
you have another strong bar going up. So that's again erratic bar, very good. So here's grindy behavior. It's almost like consolidation as well. Grindy
Mhm.
behavior as well. Good. Uh,
There's retracement.
yeah, good. That's weak retracement. This
One
is
is
strong.
strong.
Yeah,
This is a long one.
yeah, because that's a long one.
Or-
Okay, right. And here's a stronger one right here. Go to this one. Go, keep them going up. You know, go up.
Oh, here.
No, go up.
This one.
Yeah. See, that's a that's a strong retracement. It's longer, but what happened was, I think this continued going up, but this is part of a retracement. That's a strong retracement because look at the bars are end to end and it's deal longer. So that's considered a strong retracement. And then it would continue going up. I think this was more of a consolidation. Yeah. So this is a strong retracement. Look at the size of the bars. They're end to end. This is basically convoluted. The one next to the retracement, the next one. Yeah,
This
that one. Yeah, that's also a weak retracement as well. And the next one, right? No. That one, the next one on top, that one, no, right there. That's a very weak retracement right there. That one, yep. Very weak retracement, okay,
I have one more example, I think, for
Okay.
retracement. Yeah, this one.
yeah,
Strong retrace.
right, because your run is
This-
going down. You see the overall trend is down, so basically that's a retracement. That's a strong retracement, very good. Now, in terms of this one, I would still say that's a strong
It's
retracement.
strong?
Yeah,
Okay.
okay, there's really no,
Weak.
right, let me see here. We're going down. Here's the weak retracement right here.
Here.
Yeah, right there. It's not as
Oh.
long, right? It's real, that's weak. Okay,
Okay.
Good.
So this one is still strong.
yeah. So the run here going down from that weak retracement is basically, if you consider this a run, would this be a strong run or would that be a weak run?
This one,
Yeah, going down, right?
weak. Strong. I
Yeah,
know
that would
weak.
be, I would consider that strong because you
Strong.
started off strong, right? It started off in the beginning up there, way up there. No, from, remember that weak retrace?
This
Go,
one.
go up further, go up there. That's when it started going down, that's your run. Because remember your overall
Yes.
momentum, overall trend is down. So this is your run. So it started off as strong. Look at the bars, they're end to end. What happened here is basically you have a retrace, a weak retrace with a consolidation and then continued strong run to the downside. And then it consolidated. So this whole thing here is a strong run to the downside. Okay. And you'll have this other weak run. If we can, you guys see it right here. You see, Kale, go back. Remember the beginning of at the beginning of your chart here? Yeah, no. This, no, right
Yeah.
there. Yeah. See, that's a strong run to the downside. And then you see this retrace, go all the way to the bottom. Go down
Yeah.
right there. Yeah. When it retraces, that's a weak retrace. You see how it just kept on going up and down, and that's a weak retrace. And then you have a strong run to the downside again. And then you have a stronger retrace than the one before, right? And then you have, what it did here is basically consolidated, right? And here you have another retrace up. I would consider that also kind of strong kasi walang pullback. It just kept on going end to end until you see a strong run to the downside. Okay, good. Those are the ones you did.
Yeah. And the runs.
Yeah, okay, this is what okay, good. This is what I was looking for. Right, that's a weak run because it's not, yeah, I agree that
There's
because,
down.
right, that's your retrace, right? Strong run, I would like to see more bars going up, but yeah, that's the beginning was strong. Here's a strong run here, right there, right, good. The bars are end to end. As you can see, that's when you have bars end to end, that's a very strong run. Same thing here. It's kind of short though, short-lived. This is a weak run. You see how it's closing, it's just going up and down, right? It's like a zigzag going up, right?
This one.
Good. What else? What else you have?
More runs. Yeah,
Good.
more runs.
More runs, okay.
Downward.
Right. What determines a run again? It depends on what's your overall trend. You can see here the overall trend is down. So your run to the downside, that's a good. Let me see the weak run. I would say that's just normal. It's not that weak. That's normal. This one is a very strong run. Is the second one very good? This is a strong run to the downside. I'd like, it started off, I'd say, okay. This one, you had the first one right here. I would say that's, no,
Strong.
to the left, to the left. Kaliwa. Yan, yan. That's a strong run.
Strong.
That's a strong run. It goes from way down here. It started, all right, that's a strong run right there in the middle, okay? Now you want to see a weak retrace. You see this one where you said strong run, right? On the right, kanan, kanan, kanan. You label, yeah. So this retrace, right? No, that one. Yung third one, the third one.
This one?
Hindi. Yung strong run, na label mo strong run. Yan. Okay, that's a strong run down. Then when it retraced back, that's a weak retrace. Ito. That's a weak retrace. You see how it just zigzag going up, right? So that's a weak retrace. But your runs here are pretty good. This weak run you have, that's, I think that's what I would consider a normal run. The one here you enable said very strong run. I agree with that. And this is a strong run. Good. Okay.
I think I have.
Yep. A very strong run, very good. Yep. It's a very strong run there. This is a weak run. Again, I think this would be normal. It started off as weak and it ended up being strong, right? Yeah, yeah. But it started off weak, right? Yeah, that's why I agree. It started off weak. Strong run right here. Okay, I agree with that. Okay, good.
Yeah, I guess that's it.
That's it. Okay.
Yeah.
Thank you. Thank you for sharing your assignment. Let's see here, go back to mine. Now, any questions? Anyone understand what she was doing? Any questions? Was it clear what she was doing? For that?
Yes.
Okay. So that's what we were doing last week. So now what we're going to talk about, we're talking about runs, retracements, and so forth. And also we talked about erratic behavior. In terms of erratic behavior, I just want to clarify what erratic behavior is, even though Kale did a good job of showing what it was. Let me see here, right here. So it's basically what I mentioned is basically, see these bars where it's nice and small. They're kind of uniform, the same size. And out of blue, you see this bars that are longer than the other ones, the previous bars. Those are erratic. That's considered an erratic bar. Okay. When you have these bars that are longer than your previous bar, that's what you call an erratic bar. Like for example, these are erratic bars, right? So now when we talk about grindy behaviors, basically almost like she showed you, I think she showed you one where it was only consolidation. And I agree. You have some consolidation. Sometimes here's a grindy behavior, just going up and down, but it has direction. You can have grindy behavior that's consolidation, but you also have grindy behavior that has direction. Like for example, right here, this is grindy behavior, but it's still going up, right? You may, like I said, you may have grindy behavior where it's consolidating and let me see, right here, that's more consolidation right here. Grindy behavior, but it really has no direction until what do you get? You get an erratic behavior bar or a high, strong momentum bar, basically right there. Basically this is like almost what I call a reversal bar. You can see this was going down. Then all of a sudden you get a big, strong push to the upside. And what did it do? It continued going up. You see the higher lows, the higher highs. So it continued going up. This was basically what you call a reversal bar because it was going down at a moment here. It was almost like a retrace, and then it just shot back up and continued with the up momentum. That's what we call a reversal bar, reversal in direction, but that's also called an erratic bar. Okay. So an erratic bar is something that's a bar that's really larger or longer than the previous bars. Are there any questions on that? Okay, so now we're going to be covering support and resistance. Support and resistance, you'll hear some of this the same, hear some comments called supply and demand, same thing. It's basically, that's the same, another way of putting it, supply and demand. But in terms of support and resistance, there are basically, when you reach a resistance area, and we always call the resistance area, the top one here, right? That's the resistance area. You have the bottom here, which is called the support area. At the resistance area, you have a lot more, not buyers, a lot more sellers here trying to bring the price down. That's your resistance area. Again, you have a lot more sellers here trying to bring the price down. There's a battle between the buyers and sellers, but you have a lot more sellers trying to push the price down. Whereas the support, which is the bottom, right? You have a lot more buyers trying to bring the price up. So you have a battle here between the buyers and the sellers, but you have more buyers here in the support area. You have more sellers here in the resistance area, okay? As you can see here, you have more resistance area means there's more sellers. The support area, which is the bottom, means you have more buyers, okay? So this is what a typical support and resistance area looks like. It's basically what we call the pivots. When you see the direction of a run basically changes. For example, here, you see here's another, these are like small ones here, right? When you see it change direction to the downside. So you saw this going up, you see right there, bounce down. There's your change right there. There's that's what we call resistance as well as this. These are resistance areas, okay? But when you see it change direction to the upside, that's what we call a swing. Also, what we call that as a support area. So if I'm looking at my chart, right, you might be able to see some support and resistance areas. So what my drawings there, you see where this bounced off here? This is what I call a nice support area. Why? Because the price just bounced off. Where's the rectangle? So here's a good support area, right? Just bounced off. Same thing here. This is what now we call a resistance area, because you see how it just bounced off and went back down. Where's my rectangle? Right here. So there's a nice resistance area there as well, but you can extend it, right? And I'll show you why you extend it. Same thing with this. So what we talk about here in terms of support and resistance areas is basically saying when we call about interim areas, when we break the support area or break the resistance area, we call those interim areas of support and resistance. For example, you see this where it basically does come back down. That's a good resistance area. What happens is now it broke through here. What happened? It broke through the resistance area. The resistance area now becomes what? Comes back down and it bounces off the same area, except now it's coming from the top. So instead of coming from the bottom here, it's coming from the top. Now this is called the support area now. So the resistance area becomes now support. It bounces off, creates another resistance area here, comes back down, bounces off again, comes back down again, that bounces off the resistance area. What happens here? It breaks that resistance area. And the thing is, you can draw this all the way out, because now that resistance area here became now support. And that's what it all happens. It always breaks it and then uses that support or resistance. For example, here is a resistance area here. Here is where you see it's bouncing off at this area. That's a support area. You can see it just kept on holding that area right here until it breaks right here. And then what happens? It pulls back to that same area that was being used as support and is now being used as what? Resistance. So it broke down. There's no longer a strong support area. It's now a broken support area. And then what does it do? It's being used now as a resistance area. It comes back, it basically pulls back, or what we call it retraces back, and then comes back down, creates another support area here. And what does it do? It goes back to the resistance area here, it comes back down. And that's how you see the prices going up and down. So you have a resistance area here, you now have another resistance area here, resistance area here, and so forth. For example, right here. So it says here, the first thing that we must understand in order to be able to gauge whether an area is strong or not is how the market hits the areas. We either are going to have the market approach the area, or we're going to have the market pull back to the area. So the trend is either going to approach the area and have the potential of stopping it, or it is going to break through the area and pull back to it. The idea here is that if the market approaches the area, the support or resistance area can stop the trend, which creates a possible strong area. If the market breaks the support or resistance, then we still have an interim area, since it didn't stop the trend from reversing. So one thing we must pay attention is that just because an area is hit like 3, 4, 5, or even a million times does not mean that it is a strong area. If it breaks that area, it will be considered as an interim area. Okay, you got that. So basically, here again, you see this, we have a support area, price came back down here, bounced off again, went up, bounced up, went down, bounced off this area, went back up. And now the third time it tested it, it broke. So this was a support area, as well as when it bounced off this support area, it created a resistance area because it would bounce off this area, come almost like a ping pong, right? It's almost like a ping pong match. Bounce off this support, come back up here, bounces down, that's your resistance area, and then we're just going back into up and down here. It creates a channel. So once it breaks this, let's say this right here, support area, it breaks it, that now becomes an interim area of support, but then it also becomes a resistance area here. It pulls back. Remember it said there, it breaks, it pulls back to the area. Now it has become now a resistance area, right? So you see it hits that area, same thing, bounces back down, and then you have another resistance area right here. It doesn't show there. Comes back here, comes back down again. You see this? So what happened is it finally broke here, and then it's using this same resistance area right here. This is basically strong resistance until it gets broken. Once it gets broken, it now becomes an interim area. Same thing with here. These are what we call, I would call this strong area of resistance. Why? Because from this point on, you see how many times it tested, it never really broke it. I mean, this is your highest point. Okay, you can see this is your highest point. Price never went above that. That would be your strong area of resistance. Same way down here, you have a strong area of support because price never went past that. So anywhere in between here, we call those interim areas. As you see here, you have an interim area here of resistance. You know, just see this comes back, comes there, comes back down, and then it finally breaks, right? Comes back down here, now being used as support. Broke, and then it broke down again past the area, used that as what? Resistance, was being used as support, broke down through it, came back up, used it as resistance, and then continued going down. And then what happened here was creating some more support here, right? So it hit this area again as resistance, bounced off, went back down, and finally broke through again, and then created another area of resistance up here. But when it went back down here, this same area is being used as support now, as you saw there. And then it would break through again, eventually it would break through and be used as resistance. So when you see an area where it gets broken, for example, an area that's being used as support gets broken and then becomes being used as resistance, that's what we call an area of interim area. The strong areas would be here where the price does not go past it. For example, right here, as you can see, price does not go past that. That's a strong area of resistance as well as here. Price does not go below this area. So that's what we call a strong area of support. But in between here are your interim areas. You may have your interim area here of resistance, area of your support. What happens? This area, basically, this area of resistance gets broken. You see how many times it got tested? 1, 2, 3, and finally broke, right? And then if I drew this out like this, you would see this area then would be used as what? Support. It was being used as a resistance here, now it's being used as support. And then it finally broke, continued going up. And you can see this area right here. What happened was being used as support again, same thing here. I can just draw that same area. When I look at my chart, you'll see numerous times where it does that. For example, like I was showing here, right? So if I draw this out, right? You see right there. And I drew this out. So if I'm looking at this area, I'm just going to say like this, okay? I would say at this point, this would you call a strong area of support because price did not go below this level. So this is a strong area of support. Whereas this one, it tested this resistance area. And at one point, if I was going to look at it like this, that would be considered a strong area of resistance, strong area of support because price is not passing that, right? So if we continue going down, we see prices, what's going to happen? Let's still use it right here as what? resistance because it bounced off, right? So it's going to test it again right there. What does it do? It bounced off again, and then it finally breaks through, right? And so it's going to come back down, and what is it going to do? Use it as what? Support. Hold it. Yeah, there it is. Use that support. So that resistance now became support. So that's an interim area of support and resistance. Now you'll see it might break through that area. Let's see. No, just continue going up. So now it creates another area of resistance here. If I draw that out, right here, there's area of resistance. Then what is that? What happens there? It basically broke, came back down, used as support, then continued going back up. So that's another interim area of support. So now you see this price, it's going back down, right? I can draw this area right here. So there, bounced off, it became support. And finally, what did it do? Broke through and then continued going up. That's still considered as support right there. And then just continue going up. As you can see how this area was pretty used as support. And then what happened was it finally broke through, and now it's going to use as a resistance. You'll see this. Yeah, there. You see when it broke, it came down right there. There's your resistance area again. But then it was strong enough to break through. It's going to try we'll test that area again. I don't know. Let me see. So basically it created another support area right here. Basically this one right there. Okay, I can draw this all the way out here. There's a good area of support, even though there's another one down here. And it's going to test it again there. It bounced off. And it continued to there, finally broke through again. And it's being used as support and resistance again. So these are your interim areas. So right here is a good support area, basically right here. See this support area right here? If I draw this out, it never really passed this area. That's a good support area. I only tested it once, and that was it. I never got a chance to test it again. Yeah, because this is creating a support area right here where it's not passing it. As you can see, it tested it so many times, so you're going to test again. And then what does it do? It goes back up and it finally broke, right? So that's when we talk about support and resistance, that's what we talk about. You see where it bounces off, okay? Like I said, for example, this one price never went past this. That's a strong support area. Here's again, strong resistance area in between here where it breaks the support area or resistance area being used as resistance again. So it breaks support being used as resistance, or breaks resistance and uses that resistance area as support. That's an interim area of support and resistance where it just breaks it. Again, here's the same thing. You have the resistance area here, strong area, never passed that after that. And you see how it bounced off and basically tested back down there. The support area became resistance and so forth. It created a support here. This became resistance. Again, tested that resistance area again, continued going down, broke this support area. The support area became what? Resistance right there. And now you have support area here. But the support area used to be a resistance area that was over here until it broke it. So interim areas of support or resistance are simply areas where the market hesitates for a moment. And then you'll find them that the market will respect these areas either for a moment or for a small amount of time before they break through them. And once they break through them, that's what we call an interim area. Okay. We may also have, instead of, so you see these interim areas of support and resistance, they're more horizontal, but you can also have these vertical ones. Or well, basically the horizontal support, we also have these areas that are diagonal, I should say. So you have you see this where it's being honored. This is your trend line going down, trend line going down. So there's your resistance area as well as your support area. And you can see that especially in a channel or a moving trend to the downside, for example, here. If I'm looking at this, there's a good one. This basically, yeah, just drawing a trend line, basically supporting that area. That's what it is, where it's really honoring this resistance, or this this resistance area here, as well as the support area here. Now we can find a good strong one here. And that's why when you draw trend lines, it's the same thing. That's the same thing as doing that. For example. This is pretty hard. Yeah, that's not as obvious there. But if you get, you know what I'm talking about, when you draw trend lines there, you'll get the same thing like that. So if you guys want to practice on what we're just talking about here, we can do what we call the resistance area. So basically 3 examples of resistance area and 3 examples of strong resistance. So if I'm going to do this homework, it's going to be like this. I'll show you good examples like I just did before. Right here. So 3 examples of a resistance area. It doesn't have to be strong, but it said that the first one is a resistance area, right? So here's a resistance area you can see right here. You can either draw a line like this. Let me see here. I'd rather do a horizontal line. So I'd say right there, you can see it honored it. There's the resistance. It tested there again, bounced off. Right there, bounced off, broke through. But I would say right here. Now, if I'm going to do this, I would probably look at the right edge here. You know, see this edge? So you can see where it's bouncing off. There's your resistance area, right? It comes back down. Where you see this, this is also a good resistance area there. Right up here, right? See how the price went down and bounced off that area. Same thing here. There's another resistance area right here. Or you can do the what we call the rectangle, right? Which I like doing better. Right there. There's your resistance area right there. If you're looking at this right there, you're going to look at that. That's a resistance area. And then as I continue going down, what does it do? It broke it. Oops. It broke it. It uses this resistance area up there. And then what does it do? Broke it down. It basically used right here more, it broke it, then uses a resistance there. It never really used it as support. So now you have another resistance area here. So that's how you draw, oh no, support, I should say, support here, resistance here. You can just draw it like that. You can just draw a rectangle. Just draw this area right here, right there. You can see that's an area of support or resistance, I mean, and you'd be right. Again, this would be an area of resistance right here. Extend this all the way out. So you'd say this is an area of support, broke right through, came back up, really didn't use that as anything. It's just basically interim area, very weak area. I only tested it here once. When I looked at this area and extended it out here, basically that's what it was. It was resistance here, broke through, used that support, went all the way up, came back down, tested that same area again, used it as a resistance, bounced off. This time it broke through and broke through again. It looks like it's going to be using that as more. So right there, used it as resistance once again, right there. So you can just draw those areas like this would be good resistance. Now, when we talk about strong resistance, like it says here, strong resistance area is basically when price does not go past that area. So that'd be, for example, in this area right here, what I just showed. If you're just going to show this, like, let's say up to there, right? You can take a snapshot and just say, okay, this area right here is considered a strong area of resistance, or I mean, yeah, resistance, because price did not go past that ever. In fact, you can go down here. You can just continue using that and just say, okay, there's my strong area of resistance. I say, okay, good, that's a good area. Here you can show here, again, you can show this area if you want as strong area of support. Because price is not going to go past that. Let's see. In fact, if you're going to do this, you might as well show me a snapshot and just show like this. There's a strong area of resistance, strong area of support. Just take a snapshot like that, and I'd say, okay, good. Price never went past those areas. That's your strong area of resistance at that point, at this snapshot, and at the same snapshot, this is a strong area of support because price did not go past this area. And anywhere in between here, you have your interim areas because you have a resistance area here. It broke right there. Resistance area, it broke, came back down, used as support, and then continued going up. And here it's being used as support because it's really connected, never really past this. You see how the bars are just still connected to this area. It's not disconnected, so that's an area of support still. I find broke, used it as a resistance, and then came back down. Is that clear? Anything, any questions on there?
Clear.
Clear? Any questions?
Clear.
Okay. Any questions? Because this, if you understand that, then like I said, this is the optional exercise to help you understand it even more. Okay. Now it says here, examples that we did the resistance, so you can do the same thing as support, what I just talked about, the strong area of support where it doesn't go past. And also you'll also do the support interim areas, where 3 examples of support becoming resistance and 3 examples of resistance becoming support. And basically this interim area is basically what this is talking about. You just label it as interim areas where support becomes a resistance. You can also label that as an interim area. Okay. Like I showed here. You see this where it basically, here's your resistance. It broke through, now it became support area. That's your interim area. So you say, example here, it used as a resistance, it broke, and now it's being used as support. There, it basically, like it says here, the examples where resistance becomes support, that's exactly what became here. So resistance becomes support, but now you can also label that as an interim area as well. Okay. And these areas of support and resistance are actually really good because basically you do a lot of trains off these areas of support and resistance. Any questions? So before we'll do that next on Wednesday, we'll talk about the Keltner channel. This is one of the indicators that we use to trade the system that I teach my students. There's basically 3. Let me see here. I can tell you right now. 3 or I think it's 4. 3, I think. So that's more advanced. Let me see here. So we take away that one as well. So the only indicators that we use are basically the Keltner channel. And you see this yellow line, that's what we call a fill line. That's basically a proprietary indicator. And we have the MACD. What we'll talk about in the remaining 2 sessions will be the Keltner channel and the MACD, how we use those 2 indicators in trading our strategy. Okay. So on Wednesday, we'll talk about the Keltner channel, how we use that. And on Friday, we'll talk about the MACD. Okay.
Is the Keltner similar to the Bollinger Band?
Yeah, similar, but I find it more responsive. It's easier to understand because it basically frames the price. You can see, I'll say most of the time, 99% of the time, it's going to be trading within that range. Within the Bollinger or the Bollinger Band. I gotta be saying Bollinger Band. It's within the Keltner channels. You can see here, it's within that Keltner. If it does go outside of it where it breaks off, I'll explain that's why it was very important to understand between the support and the resistance, because that's the outside is the other bands also are used as support and resistance area as well as the mid band. So that's why it was important to get into understand what support and resistance is. Because anything that I've been talking about is about price action that is applied. Basically, these are the components of the system that I've been talking about the past three. This is the fourth session. So basically the second and third sessions were all about the components of this strategy. Because the strategy is composed, it's basically mainly on price action. And you have to know what price action is. When you have the higher highs, the lower lows, or even the higher highs. You know when the price is going up, when you know price is going down. Because our system is basically uses a lot of momentum. It basically uses momentum, how we enter our trades, and also the components that we use it. We use the indicators here. We use the indicators here as training wheels on how to read price action. It's almost like bata kayo, di ba? Minsan, hindi ko naman sino dito na umpisa ng bisikleta. Ako, when I started riding a bicycle, I didn't start off riding a two-wheel bicycle. I had training wheels. So once you get used to training, riding with training wheels, at least even training wheels, and that's when you start riding a bicycle, really just two wheels. Ganun din dito. You learn the price action, but you'll be using the indicators to help you see what price action is about. And when you get used to a lot of our traders, some of our traders, in fact, I can basically go like this and trade off this, what we call a naked chart. It's just purely all price action. Okay. So any questions with anything we covered? And if you have any questions while going through the week, or if you decide to do optional exercises, you can direct those questions in our group chat. Okay. Where's my thing? Okay. But Kale, thanks for basically doing your homework again.
You're welcome, coach. I will try with the next one.
Yeah, okay.
I still
Okay.
have to restudy again.
Right. Well, for example, Kale, her mom was my student, and in fact, her mom is doing pretty good. In fact, she's basically doing an evaluation to get funded.
Yeah.
Okay. So I'll let you guys go. I'll see you guys on Wednesday. This time it's gonna be 7 p.m. Again, if it's not under my control, if the internet goes out. Internet has been okay. I mean, most of the time. I think when it started raining just now, I think just went out briefly and came back on 7:30. So I'll see you guys on Wednesday. If you have any questions, what we talked about, or if you're doing your assignment, let me know. Just do a chat or address your questions in the chat room, in the Discord chat room. I'll get to it. Okay. Guys, enjoy your evening, and I will see you guys on Wednesday. Yeah. Good night.
Thank you, Dominic.
Yeah.
Thank you.